Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update. We have got quite a bit to get through. We're going to do a lot of looking at yesterday's price action because, in actual fact, the stock market, and I think you guys can see that to the right of the screen, the Nasdaq closed up 3.3%, and of course the S&P 3%. Now, even things like Amazon, Coinbase shares were up 12.9%. There was a real move to the upside for the stock market. And crypto very much lagged behind. You guys will remember that, and we've got quite a bit to get through in this video, guys, but I really want to start with looking at yesterday's price action and really what that's kind of telling me right now. We were long yesterday. We were long the day before. Right, very much on both accounts. Yesterday was just we didn't actually take any money from the markets as a case of poor positioning, or poor execution, I should say. I think greed very much got the better of me. But it's not the fact that Bitcoin very much struggled around this 20K mark. If this was, and in yesterday's video, we looked at the fact that the UN had essentially called on the Fed to slow, and other central banks to slow interest rate hikes. If that was going to be the case and we were going to see a pivot, do you not think markets would have reacted? The market will tell you the news before the damn news. People out there that don't believe in TA, I've got news for you. You've never done it properly. You've never actually studied it and put it into practice, because if you had, you would see that it works. And it can be a bit of a self-fulfilling prophecy. However, it does indeed work. So really, we're going to start on recapping on yesterday. Again, we've done a little bit of it already. I do think that it's not great that Bitcoin was lagging behind and very much underperforming the stock market. It was pretty much on par with the UK 100. Now, the UK 100 has been significantly down. Today, we've got gold down, we've got the UK 100, and we've got the Nasdaq and S&P down. Crypto is very much following in sync. The real question is, does it outperform or underperform the stock market today? And we're very much sort of almost equity trader now, FX traders as crypto traders, because you've got to be cross-market. You can't just analyze crypto because it is literally moving in sync and actually moved by. You'll notice a kind of stagnation in the price until the US open at 2:30 UK time, and then the Nasdaq opens 15 minutes later. Also, we're getting a bid from the dollar. We did actually say coming into this box, this box is sort of 2001's price action. You're going to get a pullback. We were right about that. You've had that. The question really is to long or short based on, does this continue, or does this continue to the downside, or does this find strength here and actually bounce? And you are coming, my favorite MA moving average, of course the 200 is a good one looking long term, but for me, my favorite sort of long, short to mid-term moving average is the 30. Great book from Stan Weinstein, one of the first books I ever read on investing, called Profiting in a Bull and Bear Market, where he talks a lot about the 30-day or 30-week, I should say, moving average, and how it can offer guidance for buying and selling in terms of investing. But you have found a rest here. So do we see strength come in? So my bet is that you're going to have a pretty red day today unless we see a good open for the stock market. I do think, and we've highlighted this chart where we've shown you this kind of floor that's formed before we get every spill to the downside. This is still an intact downtrend, ladies and gentlemen. Very much an intact downtrend. Your demand index doesn't really tell you much. We're going to do videos on all these indicators explaining what they are. RSI, intact downtrend. Yes, potentially you had a slight bullish divergence, a minuscule one here, where you actually put in a lower low on the chart, but a higher low on the RSI. But within this, it's still, you're not really invalidating anything in terms of the macro, the sort of weekly time frame. We don't need to look at the stock. And what else have we got here? The money flow index. Potentially, you've seen an increase in the money flow, and it's kind of, the whole way down, you've been very much, let me just delete this, guys, seeing your money flow whittle away. But now you actually are seeing an increase, and the price isn't really doing too much. So there are a few sort of things that you can kind of say, oh, okay, maybe there's slight divergences here, but nothing you'd bet the farm on. You know, this is still a very much intact downtrend, and we are going to continue with our downside bias until we see reason to suspect otherwise. Those reasons are not there yet. And typically, the longer you consolidate, the bigger the break is going to be to the downside. The more momentum is going to be behind it as we have liquidity accumulating. So the last sort of major consolidation that we had, which is really where we got out the markets. Let me just make my stance very clear here. You know, it doesn't bother me if this is the crypto bottom, because we got out of not just Bitcoin, but altcoins largely at around about 44K. So just Bitcoin alone, we've more than doubled our position. Altcoins, we've, in some cases, 10x what we had when we sold if we bought back today. So it doesn't bother me in the slightest in terms of my crypto holdings if this was the bottom and I had to get in here. My bias just is that I do not believe it is. I think there is serious cause for concern with what they're doing. Over the past couple of days, we looked at interest rate rises. We looked and we actually drew a graph showing you how when they up interest rates, debt becomes a lot more expensive, and that liquidity, the money, needs to flow back into paying off that debt rather than the asset class. It's why we've seen, it's why interest rates are used as a demand killing sort of proponent, because when you up interest rates, you have less money floating around elsewhere. It needs to go back into the debt. I don't think people actually understand how money works, how fiat systems works. Just a quick representation. I know you guys tuned in to find out what's going on with the crypto market, but some of you may not understand how money works. So let's say there's $100 trillion here in terms of money. I don't know what the total supply of money floating in the world is, but this is how fiat systems work. So there's $100 trillion here. Yeah. So this is the amount of actual money. And for every dollar printed, there's the equal amount of debt owed. So when you print money, how it gets printed is it essentially gets borrowed. This word printing just really means borrowed. It gets borrowed into existence with the promise to pay it back. Kind of like when you take your mortgage out, you're taking the money and you're offering to pay an interest on that yearly. So the issue is, and this is why the fiat systems are destined to fail, is if you have $100 trillion of money and $100 trillion in debt that's charging 1% interest, well, you've now got to pay back 101 trillion if that was just a fixed interest rate over the whole term, not annually. Of course, it's a lot more if it's annually. But you've essentially got to come up. You've only printed 100 trillion. Well, you've now got to come up with 101 trillion. So how does that work? You have to print more money in order to keep the debt fed. And this is kind of this is essentially the core fundamentals of the fiat systems that we have. They are inflationary in nature. A debt-based system has to inflate. And when you enter a period where, okay, so this is, you've got 100 trillion here, you've got 100 trillion debt, but now the interest rate has gone from 1 to 3, well, you need a hell of a lot more dollars to go back into paying the debt. This is how liquidity works. We did a really good, and this is still the course that we are on, is that things get a lot tighter and liquidity continues to get drained. We've shown you the money supply. When you get a huge influx of money, Milton Friedman did a great video on inflation, and he used the example of, at one point in the United States, I think you could use tobacco as currency. It was as good as currency. Everybody started to grow it, and of course, what happened? You know, the amount of tobacco that you needed in regards to the products went up massively. You know, it's kind of how inflation works. But with this, you've got this stream of kind of money, liquidity, going into assets. Some of it's obviously going into paying back debt, but we've basically had zero interest rates. Well, the problem is with all these interest rate hikes, a lot more of that money is diverting and also coming out of assets into paying the debt markets back. So the liquidity gets drained. It's just, hopefully, and the reason I'm explaining this to you guys is, yes, some of you are only here for crypto and it's all you care about, but crypto is a market like any other market. It moves off of money. It's why we have Bitcoin USD or Bitcoin Tether in this case, which is really just USD. And it's why we watch the FX market so coincidentally. It's no surprise today that the dollar is having a bid and Bitcoin's having a bad day. It's not just Bitcoin, it's the FTSE. It's gold. Gold's down 1.1%. You know, even commodities like oil, we've got stocks like Wheaton Futures. Wheat Futures, not Wheaton, which is a mining company. Futures are down in the US. Let's take a look at the Asian market. Asian market's actually doing not too badly at all, but there's external things going on there. So back onto now, I've completely gone off on a tangent there, guys. Yesterday's price action, we actually underperformed the stock market. See if we can pull this up. Let's maybe do a 4-hour. So you can see just how correlated these are. But in terms of percentages, we actually underperformed the stock market pretty much. And you'd expect Bitcoin being a higher beta asset, a more almost illiquid in many ways and doesn't need as much capital to move it, asset, you'd have expected Bitcoin to do better. It didn't. It did worse, which is somewhat worrying. You're also, from a trading point of view, this makes good risk to rewards for shorts. If you can get in a short here, you know where your stop loss is. People will take that all day, which is why you often end up in a range-bound environment. It's why you got bids all the way here, because the risk to rewards make sense. And going back to what we've been talking about, this is basically, you form this kind of a base. Not only do you have retail buying expecting this to be the bottom, but mainly it's trader-driven. The problem is once you pierce below this, it's why you have these kind of spills. It's why you get these spills. Once you put a foot below this and you sort of trigger those stops, you get a spill to the downside. You can see you form a base here again. Hopefully teaching you guys a lot about just markets generally in these videos as well, because it's kind of lackluster in terms of crypto news. But you can see you form a base here. What happens when you put a toe below it and you trigger those stops? You spill. You're doing the same thing here, ladies and gentlemen. Or you did the same thing here, you did the same thing here, and you're doing the same thing here. And we do think that this is eventually going to lead to the downside, but you need that momentum to take it to the downside. Once you sweep this, the door's open. Not only have you been consolidating for a long period of time, which usually means that there's a lot of liquidity built up, but we're at this kind of key. You lose 20K, in my opinion, and we've done this, and we do have a head and shoulders pattern, which we've shown you. We do believe that you come in. I actually have targets at 13,800. Again, we've been really trying to bang home and drive this kind of idea of liquidity and really, you know, getting it to sink in and kind of getting you guys to understand the whole sort of monetary system and how it works, because it's important. It directly affects your lives, whether you think it does or you think it doesn't, and is actually, you know, a impoverishing tool. In my opinion. So we do have this head and shoulders that we're still looking at. We will get on to a bit of news. Main takeaway from yesterday was I don't think it was good that Bitcoin really didn't show or outperform the stock market. And the worrying thing for me is I don't want to end up in a market like 2018, 2019. I went through that, you know, this sort of a period where you just do nothing. You just range. You just range. It shows a kind of lack of interest. And it almost shows that, to me, yesterday shows that traders are actually more involved in other markets or looking for percentages in other markets. And you can't blame them for doing so. So we've got this head and shoulders. We have said, and it's always been on the cards, you did have a double peak on your left shoulder. Potentially you're going to get that double peak on your right shoulder. This is weak. This is super, super weak, guys. I think if this was, and there always is the possibility, you've always got to look at the bullish and bearish case. We just favor the bearish in terms of investing. Trading, by the way, we were long the last 2 days. Like I say, yesterday we should have took money out of the market. I messed it up in terms of positioning. If you want to find out about what we're trading, you know, we're updating our watch list and everything. You can go over to my Patreon. I think it's a very reasonable price given the sort of information that you get and the sort of regular content and interaction you get with myself. Also trading every day on there for people that are interested. Trading's not for everyone. I think people are largely insane to want to trade. It's a very frustrating game. But if you get it right, you can do very well off it. Anyway, so there's always is the possibility that maybe this is that, you know, double bottom, potentially. But you've got to see the strength first. Just like with a pivot, you know, and remember, are the Fed really going to pivot when you have inflation at 8%? That is bad. In fact, from a consumer point of view, it's good for a Federal Reserve's point of view. They owe loads of money. They want that inflated to nothing. But from a consumer point of view, your food just went up by 8% is what they're saying. In actual fact, some of it's doubled, tripled. Go into the supermarket and look at the prices of things. It's insane. And I'm talking about things like coffee, butter, you know, even milk, which hasn't been that affected, but even, you know, it's a lot more than 10%. So they are going to have to continue to bring inflation down because it has a lot worse repercussions in some cases. Really, for interest rates, it's kind of banks come under pressure. It's why in 2000 when they started up in interest rates into 2018, and this is another thing as well that I can show you guys. You know, there's always been, even though crypto's moved off the 4-year cycle theory, there's always been correlation here. Always. This was the interest rate hikes that has subsequently caused the yield curve inversion. And then, forgive me for that, guys. Subsequently called the yield curve inversion. And then, you know, we had March 2020 shortly after. The yield curve inversion predicted March 2020. You need to start understanding finance because it controls your life. It is a very impoverishing tool that I think they use to keep people where they are. Anyway, enough of that nonsense. So where were we at? I'm kind of losing myself here. So we are still biased downside. You know, yesterday's sort of lackluster price action for crypto. You'd have expected it to do a lot better given how the stock market was acting, given how gold was acting, given how badly the dollar was acting, so on and so forth. And it just didn't show that strength. So that is worrying, you know, and still kind of confirms our bias that we do think you've got that further downside on the horizon. I don't think it's going to be too long at all. Fed aren't going to pivot because inflation is so high. And like I say, inflation is extremely damaging to the masses. It's damaging to the confidence of the economy, you know, and it's also damaging to people holding that currency. Why would people hold a currency that gets inflated 8% and the yield's 0 essentially on it? You're getting a raw deal, and it you know really weakens the currency and the credibility of it. It's why we've had this yield curve. Just a quick word on this: the yield curve inversion has essentially predicted every single crash that we've had. I don't think we've had the crash from this, and I think the crash that we're likely to have is going to be very much debt driven. We saw the UN literally come out yesterday and go, "We're going to enter a global recession if we don't stop hiking interest rates." The Bank of Australia, the Royal Bank of Australia, which fed into the pivot narrative, instead of doing 50, did a 25. So maybe the Fed are going to slow down, but the problem is the interest rates are already, in my opinion, at an unsustainable level for the amount of debt that we have. They almost have to have 0 or negative interest rates. This was something that I found interesting. German minister criticizes US over astronomical natural gas prices. We have our suspicions about who actually damaged the Nord Stream, and I don't think it was the person that people are pointing their fingers at. I don't know why he would go and destroy his own leverage over Europe. And I think that, you know, well, what I think is somewhat irrelevant. So the big news coming on, and it's going to be a market-moving news, is obviously the non-farm payroll. The data from that, you know, because it's going to really show the strength of the economy, or how Jerome Powell likes to deem the strength of the economy. We've got a really tight labor market, which means we can afford to up interest rates and we can continue to bolster the dollar. That's going to move the dollar. A miss on that would maybe see it slam to the downside. The real question for me, like I say, is, and look, Fed funds rate bolsters the dollar. We've left the Fed funds rate on. The real question for me is, you know, does the dollar have an extended rally here and come back up? Maybe do some double peak and then have a longer rest. For me, I'm really trying to figure out what happens with the dollar, because that's going to drive everything, and you can see that very clearly as I've illustrated. Some news that I was going to get into, but we've gone on for nearly 19 minutes now, is, of course, the MasterCard news. Surveillance is coming to crypto. They're never going to allow you to transact with one another without any kind of knowledge of that, you know, because then how can they tax you? How can they profit from you? So on and so forth. So today we are, and we have, it's already started to slide off since we started the video. Doesn't mean it's going to continue. We are expecting downside. Certainly on the daily, but, you know, does that mean Bitcoin can't find its feet and potentially push a little bit higher, maybe into 21, 22K, form more of a pronounced right shoulder before we get that continuation of momentum build up to the downside, potentially. But as far as investment goes, guys, we are still out the market, and we're going to continue to update you on that as we go forward. But that's the update for now. I'm going to love and leave you. If you've enjoyed the content, a like is always appreciated. So is a comment. I'll catch you all in the next YouTube video. Thanks a lot for watching, ladies and gents.